Hello everyone, and welcome to this next episode of the RICS Tech Partner Program. My name's Andrew Knight and I head up our data and tech thought leadership within the regulatory standards and thought leadership part of RICS. We're a global professional body with over 130,000 members spread across the globe and working right across the property life cycle for residential, commercial real estate, infrastructure, alternative assets, land. So a very wide-ranging profession, both in terms of its geographical scope, but also in terms of that activity right across the property life cycle. And I'm really happy today to have William Harris from Gmaven with me today to talk about PropTech in South Africa. So William, please do join me.
Hello, Andrew. It's a pleasure to be with you.
And a pleasure to have somebody from, I think, our first episode from Sub-Saharan Africa. So very glad to have you on board today. Now, my first question always tends to focus, dare I say, on people rather than kind of PropTech. So it'd be great to hear a bit about your background, your experience and background in terms of the team, and a bit of a kind of the origin story of Gmaven.
Sure. Thank you. Okay, let's get straight into it. I'm a chartered accountant by profession. I qualified, way back in 2003. Interestingly, went and worked in the States. My major client at the time with KPMG was Silicon Valley Bank, and it's quite amazing how it's sort of gone full circle. I'm back in tech now. I got out of the corporate finance world in 2006 and got into commercial real estate, working with the doyen of our industry, focusing on investment sales, capital markets. Below the radar, large transactions dealing with the life houses, listed sector, and private players in South Africa. And I think immediately I was struck by just how inefficient and repetitive the processes were. Using the tools that I had at the time, it was Excel. I think there's no shame in it. That's where we all start. I looked to automate processes. I moved across to Microsoft Access. And I think fast forward, we're now a cloud-based platform with a team of engineers spread across the globe, mainly based in South Africa, focusing on solving both data and human inefficiency issues in the commercial property space, specifically in the African continent.
Thanks, William. So I guess it'd be interesting as our first speaker from Sub-Saharan Africa to reflect on your knowledge and experience of a particular South African market and other markets you're involved in, because I guess there's going to be degrees of difference, but also degrees of similarity. So can you unpack in a kind of a reasonable proceed form, what's the South African market unlike? You know, data flows, performance, vacancy rates, asset values.
Great, sure. I'm actually gonna. I'd love it if this is as interactive as possible. So I'd love to also hear your feedback. But I'm gonna lead.
Sure.
Thank you. So South Africa historically is built on a relatively solid base of solid public sector data assets. So we've got the Cadastro Surveyor General, we've got the deeds/registry here, and then we've got Companies House or CIPC, our version. So three of the four data assets, that enterprise assets that make up commercial real estate and real estate are covered here by relatively reliable public sector data assets. So those are the cornerstones of everything. And as we know, commercial property runs on data, and everything builds on top from there. I would say the industry is slightly different to the UK in that here, I think we're a hell of a lot more thrifty, if you can call it that way. Yeah. So what tends to happen in this side of the world is generally the landlord and it does not have a representative. The brokers and agents out here are effectively free agents. Yeah. I'm going to name the conflict of interest. They're paid by the landlords, but they work on behalf of tenants. And stock, interestingly, here is largely in the public domain. Yeah. So the landlords here are distributing on a weekly, monthly, bi-monthly basis their vacancies by way of vacancy schedules. The information's pulled out of their property management software systems or managed in parallel with their property management systems. And that data is emailed off to all the brokerages in South Africa, who all manually capture the vacancy information into their systems. You're probably looking at around 16,000 units across South Africa, totaling I'd say about 80 million square feet of space. And that data interestingly changes about 70% month on month at a unit level. So as you can understand, there's a lot of inefficiency here. There's no switch, and we're fortunate to have got our heads around this, and we get on the end of all those vacancies and then push them into our broker clients, eliminating a lot of inefficiency, waste, data errors, and time delays as part of that.
How does the market, has the market been seeing some of the trends we perhaps see in the UK and US around perhaps shorter leases and shared workspaces and that more active asset management? Are some of those trends playing out?
Yes, they are indeed. Property funds here have been pivoting. There's definitely pressure on the shorter lease tenor that I think is coming from overseas. And in fact, I think it's probably exacerbated by the fact that our economy isn't doing as well as it is your side of the world. Office vacancies, which is where the more flexible leasing arrangements have come from, are probably hovering just under 20% in the major nodes across South Africa, which I think in your world is possibly terrifying.
Yeah. And in terms of investment flows, I mean, clearly thinking of UK and London particularly, there's a lot of foreign capital always flowing in. Do you have that same kind of flow of foreign capital, or is it a more domestic market in terms of pension fund and asset managers and that sort of thing?
Yeah, excellent question. Sure. I think asset prices have come off a bit, and that's largely been a function of, sadly, local money seeking hard currency security.
Yeah.
So a lot of South African businesses who are accustomed to quite high returns are actually looking in the more faster growing markets of East Europe, Spain. We've got a far higher appetite for risk than you guys, and we've powered in there. And as a result, demand supply prices have come off a bit locally.
Yeah, indeed. So tell me more a bit. I mean, you alluded to those kind of productivity gains and efficiency gains. So how's your platform actually doing that in terms of nuts and bolts? How are you sort of fixing some of these issues in terms of the, as you say, the lack of efficiency, the lack of productivity, and the kind of the inability of data to flow around and make these deals work more quickly?
Lovely, Andrew. Thank you. Yeah, I love that question because personally for me, the eyes start rolling when people talk about PropTech and they start giving the ML, IoT, AI, blockchain buzzwords. It's really irritating. The reality is PropTech is completely irrelevant unless it's either saving people a hell of a lot of money or making money. And so, yeah, I mean, if I may, I'd love to give you an example of what we do and how we shorten process flows here. That's great. I'm going to just attempt to share screen if I can. I don't know if you can see my screen now. Lovely. Okay, so what we're seeing here is these are effectively where all our properties are sitting on a client system. We feed actually, as I said earlier, and this is probably a really fun concept to you guys in your part of the world, where we almost one layer disintermediated, where the property funds are proactively marketing their vacancies out there. As I say, we sit on the receiving end of these vacancies, and we feed these vacancies directly into our client accounts. That's geospatially defined, so they're pretty clear about what areas they're focusing on, and they only get the vacancies for those specific areas and for the specific property category that they're interested. So if it's industrial, more than, let's say, 50,000 square feet within a specific node, that's what they're going to be seeing. What I'm going to show you now is a classic example. We're going to chase the high volume world of leasing, where we see most of the transactional flows here. I'm just looking at an inquiry. This is obviously in square meters of some office space, and this is potentially somebody looking for some space in our capital, Johannesburg. The one thing that we know with our esteemed users is that most of our clients are sitting on the front office deal maker side of commercial real estate. you're never going to stick incentivize these guys. It's always got to be driven by carrot. So as much as possible, we look to automate process flows and eliminate waste and inefficiency. So here you're simply looking for some spaces, and very quickly here we're going to click a button. The stock's already handled. The algorithms are doing all their fancy work, looking at all the different matching permutations that stock can be returned in, and very quickly we are presenting a short list of possible options to a tenant. Now, what we're seeing here, this is taking a matter of minutes and seconds. This is running a little bit slowly with the burden of the video interview.
Yeah.
But we're very quickly moving to a long list of options that's specific to a tenant inquiry that can be often to a tenant's hands within, I'd say right now, 3 minutes of an inquiry coming in. And that speed of turnaround, which customers are familiar with in other industries, and increasingly are demanding of commercial real estate, doesn't exist without the technology, and certainly the level of service that we love to give our customers, that doesn't happen without these tools. So this is a classic example of how a sales process, which could take anything from 8 to 14 hours, has been compressed into a couple of minutes. I'm just generating a shortlist brochure now.
Yeah.
And here you've got a stunning long list of all your options. It's branded up, it's customized, it's unique, and it's sitting in your customer's account.
And I guess you're presumably getting data here from a number of sources to try and populate as much background data on the assets, yeah?
That's exactly it. That's exactly it. And I think even more so, we're getting data from a wide variety of property funds, just under 300 in South Africa. But also we're taking that data in because it's really unstructured, and actually putting it into a standardized format that can then be used for comparison purposes, whether people are looking to run DCFs,
Yeah,
or more advanced financial calculations. The important thing is the data is standardized and well structured, and obviously beautifully presented according to these algorithms, which can cater for what we call like long and short and fat and skinny permutations of
indeed.
data.
But what you're doing is effectively fixing that problem of that inconsistent, unstandardized data sets that ultimately everybody wants to see the same data, but everybody's providing it in a different way.
Precisely. If I may, I'm going to go back to our leave this and go back to our screens. But
Yeah, sure.
There's a whole bunch of cool stuff that obviously lives on top of this initial process.
Exactly. And you mentioned earlier that theme of disintermediation, but by technology. Do you think, how far do you think that's going to go? Because it's come somewhat of a cliche to talk about data and tech causing this disintermediation. I mean, particularly either in South Africa or other experiences. How far do you think that's going to go in terms of putting ultimately asset owner and potential occupier together without the marriage broker in the middle?
Such a topical conversation, Andrew. I'd love to actually give you a bit of floor on this, and then I'd chip in with my opinion.
Well, I suppose my perception is that I suppose particularly once you have people beginning to proffer this kind of data up in a good way, that obviously leads in one direction, to that sense that the broker is not adding value. I guess the counter argument is particularly where you have investors who are moving into a new area, or perhaps a different kind of asset type that they haven't normally used, that perhaps they do want that local knowledge. And I suppose it's that, the broker continues to need to add value here, and it's where that value is going to still be directed either to the asset owner in terms of them perhaps being able to reach a larger audience, but also that kind of local knowledge. And I suppose if you think of perhaps an equivalent in the UK that might carry across to South Africa, if somebody perhaps is looking for space in London, that they have a lot of assets already, they know London well, but if they suddenly want to do it in Manchester, there they might want a broker. Is there a same thing where somebody's comfortable in Joburg, but they want to go to PE or Durban? Do they then say, well, actually, I need somebody with boots on the ground who's got that kind of local knowledge?
Yeah. So I mean, my view, and we have to take quite a strategic and very cautious view on this, simply because our clients are the brokers. So we are talking our own book here, as well as the property funds. So I do hand out that caveat up front. Our sense is, because a commercial property transaction to a tenant is such a high value transaction, it's not like booking 2 nights on TripAdvisor. You generally you're going to commit to it. It's a big ticket, and it's generally got a longer duration. And if you bring those cash flows back, it's a significant amount of money that you're committing to, and it's a huge obligation sitting on balance sheets. So my view is, you've got a lot of risk, and so that puts a lot of pressure on the decision maker, who may be very infrequently making these sorts of decisions. And so generally, when that set of variables arises, you're generally going to want to bring an expert in who will be accountable for the performance, and there will be some element of recourse if a poor decision is made. So, that's my.
No, I was going to say, sorry to interrupt, William. I was going to say, I mean, are you seeing, in that sense, then, a shift in terms of the kind of advice that brokers are now being expected to give? If a lot of the kind of the spade work, if I can use that phrase, is done in terms of producing these listings, these brochures, are the customers now saying, well, actually, I want you to do some additional stuff here, some different stuff, some more value add, because I'm getting the sense as a customer that this stuff is just happening by default now, which is great. So, is there a change in almost the service offering from brokers? Would they realize that actually they've got a sense that there's some other stuff I need to do here?
Absolutely, Andrew. I love how you put it. And I think that is the professionalization and the maturity of this industry that I think every player in this industry is desperate to see. It's the liberation of these businesses and highly skilled, high opportunity cost of time individuals who are being freed from this tyranny of managing data, who can actually elevate themselves and add value to their customers. And this is really exciting. What we're seeing in the industry as the sort of grunt work is being eliminated, and in quite crude terms, what we're probably seeing is fewer really skilled individuals covering more of the market and providing a really superior experience to industry outsiders, which will have a fantastic positive effect on the reputation of the industry.
Now, I mean, you mentioned that it's clear from your platform that your technology is doing a lot of hard work to sort out some of the data issues. I mean, what's holding the industry back from almost getting their own house in order? Not so much putting you out of a job, hopefully, but what's holding back either the culture or the technical issues about the fact that actually we continue to hold as a sector so much information on Excel or documents, or in a way that actually requires people like you to do all this elegant number crunching and reformatting? What's holding us back? What needs to change?
So yeah, great question, Andrew. I think it's a really deep and layered and nuanced question. So I'm going to start off with the term that actually Kim van Rooyen of Jordan Townsend coined, which we absolutely love, which is the brilliant basics. And if you're thinking about a commercial property solution as a cathedral, you've got piling and you've got foundations, which without those foundations are you cannot build the walls, and you obviously can't get the steeple. So what are those? And if you don't get those things right, you're not in the dance floor. And in our view, it's managing data at point of capture. And that sounds like a really easy thing to say, but it in a very crude, in a very simple way, it's simple things like capturing information and having drop-down lists. So capturing a property in a specific area and having a list of potential suburbs that property can be in, or potentially capturing a geolocation, and that geolocation inheriting a suburb, a city, town, a province. It's that very unromantic rigor which needs to happen at point of capture, which is critical for certainly yeah, the sexy stuff later on to happen. And that's super unglamorous. It's really hard to do, uh, but it saves so much agony down the line in our view. And that painful stuff is ignored. People don't want to be doing it. And unfortunately, the tech doesn't exist, which enables that data accuracy at point of capture.
So I mean, it almost sounds, and it's a horrible phrase to perhaps use, but a degree of immaturity in the sector in terms of just their approach to capturing information. I mean, are there, in your view, kind of either some incentives that could perhaps be created for the market, or indeed are there some existing disincentives that just mean that there's no that there's no driver for people to do this? Because you'd think, as you said yourself, these are huge decisions, these stay on the balance sheet for years, these are big decisions, and yet we seem to be treating it as a sector with a degree of kind of laissez-faire and relaxedness, if that's a word, that we wouldn't apply if we were maybe checking the details of a car we were going to buy or looking at the menu of a restaurant. It almost feels that we're treating an incredibly expensive asset, both in terms of the cost of acquisition and occupation, with a degree of, as I say, immaturity, which is kind of counterintuitive, really.
Sure. Yeah. While you were talking, I think one thought crossed my mind, and is that your typical commercial real estate persona is generally a deal maker. They love the deal. They classic front office players, and these chaps and women get promoted to powerful positions on the back of their superior deal making abilities. And that's amazing, because that's the engine that drives the entire business and an industry, and long may that continue, and we're doing whatever we can to support those key players. The challenge is that persona is not necessarily administratively strong. So in the DNA of that human being, you've got someone who doesn't love the detail and doesn't value the agony of operations. And so you've already got a fundamental challenge at that level. The next point, when you mention the word incentives and disincentives, there are tremendous incentives inside of businesses, inside of your property managers, inside of your property funds, to just get their data right at point of capture. The challenge, and I cannot talk globally, I can't, and I'm not talking for all property management software providers in South Africa, certainly, but there is a tendency, as a result of the immense complexity that these businesses have had to solve in solving both data and SaaS, and then oftentimes an ERP solution on top of that. So you've got this sort of holy trinity of really complicated problems that they're solving, where in the development of these solutions, they've had to make compromises. And some of the compromises have had to be around data integrity, which is a very prudent bit of technical debt to incur, because you've obviously got to get to revenue. But the challenge is that those chickens start coming home to roost, and it gets really tricky when then you've got these businesses which are running on legacy data, and you've got legacy systems which you have to do massive overhauls, and the data is unstandardized. So it's almost a problem that looks to be avoided. And the challenge is the actual businesses relying on the software to do their job, who are acutely incentivized for this to work, don't have in themselves the ability to solve the problem.
So I mean, is it best for these organizations to start building new systems internally, or should they go out of house? And is the sort of, I'm not a great fan of the word PropTech. I prefer to think of it as just generally data and tech for property in all its guises. But is there a role that even the PropTech world can play in terms of pushing for more standardization and actively encouraging a bit more consistency, both in terms of the architectures that they have to allow data to flow around? Because we're always going to be talking about ecosystems here, whether it's private data that's held, or all the public data sets you've mentioned, whether those are cadastral systems, mapping systems, registries, companies' house. You want the whole set of islands of data to begin to recognize that they need to have APIs, to use the jargon, standardization. Let's agree what we call these various fields. So I'm not sure it's an easy fix, but what's the best route for the industry to take?
Sure. Wow. So I think there are three strands to that response, and I think that the first one, which you touched on, is do businesses look to defocus? Property businesses look to defocus and look to solve these pervasive issues by building technology themselves. Incredibly tempting. I think the challenge is best summarized by just don't know what you don't know. I think there's a beautiful saying. It came from a book. I think the late Tony Tsai, who had a business called Zappos. There's a quote there which says, "In the beginner's mind, the opportunities are many, and the expert's mind, the opportunities are few." And that's such a good way to explain how easy it seems from the outside in to resolve these issues. Short answer is we can't see the financial benefit of businesses defocusing from commercial property businesses defocusing from their core business and looking to build tech, simply because even if they are, and I think there's a big if there, if they are successful in solving it, there's no way. It gets really difficult for them to then recycle that innovation across the industry in order to subsidize the very expensive maintenance and support of such a solution. So inevitably they're going to get left behind, and ultimately, as we've seen with a lot of our clients, they unfortunately are just forced to turn off this asset. It becomes increasingly deemed to be a vanity project with very low ROI, and then just ends up being a liability. So we would caution against that, but at the same voice, we would encourage businesses where there is an element of secret sauce to look to build on top of existing solutions and add their layer of secret sauce. And a classic example would be, for example, a website which is public facing. A classic example is a computer here. I mean, you've got an Intel chip inside. Most of these things are running on it. But we all out here shopping for a Dell or an HP or a Lenovo. It's the same sort of example. That leads on to your next strand, which talks to this holy grail, certainly for people who have the capability of being neutral and objective and very much thinking what's in the best interest of this industry, which is standardizing data and formalizing the data structures to certainly accelerate the sharing of data within this ecosystem, as you quite correctly term it. And I think that then, so I think it is an inevitability that it, and I sense there are definitely going to be fiefdoms and certainly little pockets of and certainly incentives for that to be held back. But I think with the passing of time, that those data structures will become open sourced, and then that will accelerate data sharing and the ability for potentially, as I spoke about earlier, property funds, which is decoupled from the service provider, and so they become less dependent on the service provider because the data structures, that data contract that they're working to are standardized. The challenge, however, is you can have the most beautifully standardized data structures in the world, but if your data is not correctly captured at point of capture, you're going to have problems processing that data. And again, it's a very unromantic conversation. Yeah. I'm sorry for going back to it, but it's something we've seen over and over again.
Well, I suppose that famous phrase "garbage in, garbage out" still holds true. If you know, you can have a very elegant data model, a great front end, but actually if there's no culture of quality and a sense of why it's important, and those simple things at the front end, you are going to get poor outcome. I guess my last question to finish, and I guess this relates both to perhaps some drivers and incentives around data, but also perhaps a contrast or comparison between perhaps UK and South Africa is the impact on ESG that certainly we're seeing over here, that people want to know data about their assets in terms of those ESG credentials, and that data requirement, whether it's for reporting purposes or whether they feel that the properties they want to occupy should have these credentials is driving, I think, an interest and a real imperative around data. Are you seeing that agenda in South Africa?
We are lagging you. However, the power of the risk and compliance horseman is very strong. and I sense that I'm not a fan of despite my background of the risk and compliance and admin piece. I am a commercial property player at heart, but I sense that is probably, I think, as you identify, going to be a very strong lever in accelerating the maturity of this asset class.
Yeah.
And it's going to start in the ESG space, and as these schemas and paradigms become apparent to decision makers, so is it going to insidiously creep into other parts of the industry and these systems.
So it's coming down the tunnel at you. But it's been fascinating. Sorry, carry on, William.
No, I was literally just going to say it's not something that's being received with high levels of enthusiasm among the deal-making fraternity. But yes, I think
it's coming. Well, it's been fascinating to talk and get an insight on the South African market, and in general terms your thoughts on data and quality, and how, as you say, when you take the jargon away, it's all about delivering efficiency and productivity. The bits and bytes are not important, and indeed how basic quality data entry is so important. And I think that's as much a cultural thing as a technology thing, isn't it? So let's hope that the industry continues on its journey to maturity. Well, it's been great to talk. I look forward to connecting again in 2022. So for the moment, have a great Christmas and New Year break, and look forward to catching up again with you in 2022.
And to you, Andrew, it's been lovely.